the most profitable strategy in all of real estate, subject to investing. Now, when we buy a property subject to, what we're doing is we're buying it subject to whatever underlying liens or mortgages exist on title. That's where the name subject to comes from. For example, let's say we go out and find a nice little single family house and we find somebody who bought it 4 years ago, okay? And they bought it for $250,000 and they got a mortgage on it for $240,000 with a 3% interest rate. So their monthly payment is, let's call it $1,300 per month. Okay? So to buy this property the way most people buy property means that I've got to go out and either get a new loan to pay off this $240,000, or I need to borrow private money or do something because I've got to pay this loan off. Now, if you go to any title company, any real estate agent, they're going to tell you you have to pay the loan off to be able to purchase the property. Well, nothing could be further from the truth, because I can actually buy this property from this seller and simply take over the underlying loan. So if I agree to make the $1,300 per month payment on behalf of the seller, I can keep their existing loan intact and simply make the monthly payments and own the property. Now, we do this through a document called an AITD. I want you to write that down. An AITD stands for an all-inclusive trust deed. Now, you may have heard of this as a land contract or a contract for deed. Any one of these documents would accomplish the exact same thing. This is an all-inclusive trust deed, which means the seller's transferring ownership of the property to me, inclusive of all of the underlying debt that sits there. Now, you might be thinking, well, Lee, why in the world would anybody want to sell a property subject to? And why would anybody want to buy a property subject to? Well, I'll tell you. I had a situation, this was a deal I just did a few weeks ago, exact same scenario. People had bought the house, they loved it, they took great care of it, and they had a 3% loan. They had a $1,300 monthly payment. Now, unfortunately, because the market was relatively flat, when it came time for them to sell the property, it was worth about $250,000. There had been no appreciation. So for them to sell it for what they owed, they would have had to come out of pocket, because $10,000 is not enough to cover closing costs, realtor fees, title transfer fees, doc prep fees. So they would have come out of pocket to sell the property, which they did not want to do. So I said, tell you what, how about I purchase the property subject to the underlying mortgage? And probably like many people, they went, what is that? And I simply explained to them what I just got done explaining to you. I said, look, I'm not going to bring any money down. I'm just going to step into your mortgage and I will take over the monthly payments. Now, to be clear, this is not what's called an assumable loan or an assumption of a loan. That is a qualifying process, which means you've got to have good credit, good income, all of these things, because you're essentially qualifying to purchase the property or to get the loan. That's not what we do here. Subject to is a non-qualifying assumption because we're merely agreeing to take over the monthly payments. Now, I'd be thinking, well, Lee, why would you take over the payments? Because you're paying $240,000 for a property that's worth $240,000. That doesn't make any sense. Well, it does, because the fair market rents for this property in the neighborhood that it's in is $1,975 per month. $1,975 per month is what this property will rent for. Now, when we simply take their payment and subtract from it what we can get as a rental, we generate $675 per month on this house. So we buy it subject to, I agree to make the minimum monthly payments, I then rent it out to somebody else at $1,975 a month, and I make $675 each and every month without coming out of pocket any cash. Now, the reason I love subject to is it's non-qualifying, credit score doesn't matter, I don't have to have any cash, and I step into a really, really good rate on the underlying loan. 3% rate, that's crazy good. and look at the cash flow, $675. If you'd like to learn more about doing these subject to deals, as well as getting access to all of the documents that you need to accomplish these types of transactions right in your own market, simply click the link below.